Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, August 13th, 2024. Let's jump into the charts. I'm going to jump right into this area here, kind of this muddled, which way do we go? Trend defining rising two-thirds speed line, trend defining descending, former descending 1-year channel top. We've been trading around this area like a magnet for the last week, both sides of this area. The more meaningful development, I think, over the last few days has been the settlement above a newly formed descending one-third speed line that is based on that low from about a week and a half ago. And it comes in at 190.69 today. We closed above it last Friday. It held Thursday, held Wednesday of last week, closed above it Friday. No real follow through on Monday, of course, though it did hold the selling pressures for the day. We settled slightly lower on the day. By a hair, I'm still skewing north. I see no solid reason or compelling reason to play the short side, at least near term. I do think if we rally into the 220s over the next couple of weeks, which is actually anticipated above this 190.69 speed line, then that's your aggressive short sale zone or long liquidation, what have you. On the way up, I still have 203.87, but I've reduced that to an intraday resistance level only, not because I think it's likely to give way today, but in terms of providing you a meaningful upward pivot point, a buy signal through the balance of the week. That would come with a settlement today above this, clearly defined descending channel top that takes it's about a month of activity at 207.85. So pushing above 203.87 today does signal 207.85. We can top out at 207.85 on a daily basis, possibly even fall away from there for a day, 2 or 3, and then we'll re-examine what this chart is looking like at that time. But the settlement above 190.69, descending one-third speed line off that early July high, does carry with it the likelihood for bullish continuation recovery into the 220s or the 230s, depending on where this descending two-thirds speed line is. Closing above the descending one-third, the descending two-thirds becomes your next objective, whether you're looking at the last month of activity or the last 10 years of activity on just about any chart. 207.85 on the way up. This is a pretty solid, I don't want to call it a 3 to 5 day swing. I think it's more like a 1 to 2 day swing. So it's kind of your day trade area. But 190.69, once again, able to contain selling on a weekly basis, and above which we do maintain a 2 to 3 week objective in this 229.44 to 230.78 region, which is a combination former channel bottom and newly formed descending two-thirds speed line. And if we close today above 207.85, we should see this upper area within another 3 to 5 days or by the end of next week at the latest. That would complete a near-term target. You could take profits in the upper 220s, low 230s, and even play the short side as we move by that point in time into September trade. The market then prone to falling away over the following week, 2 or 3. It would be a settlement above this upper 220s, low 230s that would set up a meaningful buy signal as we continue into September trade. And I don't have that drawn out here for you, but I can tell you it would our initial target would be a channel top kind of coming across this way that is now right around the 280s. That would be our next 3 to 5 week objective if over the next 2 to 3 weeks we close above the 229.44 to 230.78 region. Let's cover the downside today. We, of course, have 190.69. And we also have 191.76, nothing more than the low of this range. So I really think looking at this now, I kind of wish I'd reduced 191.76 to just a minor point. But the truth is, closing below 191.76 is a downside pivot point through the rest of the week and really through the rest of August. But with the speed line, I think it's worth waiting. So it really is almost a little more than a 1 point range right now between 190.69 and 191.76 that can contain weekly selling pressures, can contain weekly lows, is an area that you can buy in anticipation of the 220s over the next 2 to 3 weeks. and you can make that like within 3 to 5 days of closing above 207.85. But once again, if we were to close below this 190.176, 190.69 region, we have ourselves then, with present volatility, a 2 to 3 week sell signal down to 167.41, and with present volatility, a 2 to 3 month sell signal down to 129.83. But I would expect, as this stock is prone to a spike in volatility at some point, that could yield 167.41 in as little as 1 to 2 weeks, and 129.83 in as little as 1 to 2 months. But if we close below, this is not properly labeled. My apologies. It's no longer 194.18. It is 190.69. So just want you to know, I'd like to erase this right now. It is 190.69 to 191.76 that can absorb selling pressures for the week itself. And yet, if we close below it, dump those long positions and play the short side through the rest of the week and into next, expecting 167.41. And you could, under that scenario, perhaps reach for 130, 125 strike out of the money puts that don't expire. I'd go about 4 months out on this is probably a 2-month move. I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of those 2 stock picks we put out every week that you never see on YouTube, and our daily triple Q and SPY analysis. I'll be back tomorrow with Wednesday's Tesla, and you have a great evening.